And good day, everyone. Welcome to another remarkable town hall experience. This is our final get-together in the town hall format currently with Trey Wasser of Elay Gold and David Garofalo from Gold Royalty. Gentlemen, thank you for joining us once again as this transaction moves further ahead.
Thanks, Mark. We're happy to get on here one more time, and I want to go over, and we want to leave time for questions. Anybody who's having any last minute issues with their stock and their elections and everything, and any warrant holders who have questions here, and then just like last time. Move on to the exciting part is what this new platform is going to mean, and how exciting it's going to be for Jerry and I to be joining the Gold Royalty team, and to really move this combined company into the mid tier and beyond for royalty companies. So I'm just going to start here real quick with David will be making all these forward-looking statements. I'm just going to talk about the proxy materials and everything. At this point, I'll just talk about some deadlines. We basically have a deadline of Thursday. The day after tomorrow is the last day to make your election. So we have worked very hard to get these brokers all in line to where, your broker you should be able and understand this election process. And if I know some of the brokers were cutting off late last night and cutting off today the elections, the actual deadline is Thursday, and I think those brokers, they're kind of doing it on a best efforts basis. One of the reasons that they chose yesterday as the cutoff is that would have been the record date. In other words, anybody who bought the stock after yesterday is not actually going to be an owner of record on the election date. So, and just to be aware that if you do make an election with your broker, they will actually also freeze the stock. It'll go into escrow. So if you have any intention of selling the stock between now and the meeting, you would want to not make an election. If anybody is still having trouble with their broker, then I urge you to call the hotline. And the only, if you are a shareholder and you hold your own share certificates, then you do have to get those in to AST in Toronto prior to, I believe it's close of business on Thursday. So you're running out of time there to make an election. Now, keep in mind that if you make no election, whether you're a registered holder or your shares are held at the broker, you will get the all stock option. So worst case, if you're looking for the stock anyway, again, not making an election will only eliminate the cash portion of your thing. And then lastly, I'll touch on the warrants before I hand it over to David. The warrants will, at this point, we have cut off warrants, exercising of warrants with the cash election. So we will still, up through probably the middle of next week prior to the meeting, be able to exercise warrants, but they will get the all stock election on that. It'll be the default. Again, the benefit of the warrants is if you're thinking that you might want to exercise any warrants and sell them over, I'd say between now and even the first of the year, then maybe it's probably a good idea to look at exercising now, because you will get registered free trading shares, where if you exercise before we are able to register those warrant shares, you will get legend stock that will require a 6-month hold before you can sell it. So something to still consider. And to get that free trading stock, you still have about a week to contact us and you want to contact either myself or Steve Kenwood or Joanne, she's also available for these to pass it on to get those warrants exercised. So that's it. We'll open this up, and if we have questions at the end, then as far as any of the mechanics here, we'll get to those. But meanwhile, I want to turn this over to David and to talk about this exciting platform that we're putting together for both the growth in the royalty space and the consolidation of the royalty space.
Thanks very much, Trey, and good morning, everybody, and thank you from everywhere you're calling in from. I see Cincinnati and Ottawa, among others, and I'm sure there are many other locations that calling in from. I think one of the strengths of Ely, and for that matter, Gold Royalties, is the diversity of our retail shareholder base, and I'm delighted to be able to speak to you this morning. And I'm really, really excited to talk about what the combined company will look like and how it will make us much more competitive in an increasingly competitive environment in the royalty space. But it's a timely period for us to be in the royalty space because the industry is starved of growth projects, development stage projects, and we're in a position to provide them access to capital as they turn their minds towards exploration and development, something that the industry, the mining industry in particular, is severely underinvested in over the last 5 or 6 years. And as a result, we've seen a 40% decline in gold reserves. And precious metal royalty companies are an extremely important part of the ecosystem as the mining companies turn their minds to development and exploration again. And it's become an existential issue for the industry given how low reserves are. The average reserve lives of mines globally right now is about 10 years. 6-7 years ago, it was 20 years. 10 years is nothing. It takes typically from discovery to first production anywhere from 15 to 20 years to develop new mines. So we're not going to see a reversal of that downward trajectory in reserves and production for the foreseeable future. So the industry has to start to put capital into the ground. And the royalty companies provide a meaningful source of capital for the developers and operators as they start to turn their minds to replacing reserves, replacing production. But in order to be competitive in the royalty space, you require scale. You need to drive down your cost of capital to be competitive. And that's why a merger of this type is so important to the space and why creating the scale that we're going to be creating in the new Gold Royalty combined with Ely is going to drive down our cost of capital, drive up our multiple, achieve a re-rate for our shareholders, which I'll talk about in a bit more detail later on, and give us much more balance sheet strength because effectively we're acting as financiers for the developers and explorers. And so it's important for us to have a well-capitalized balance sheet with no debt, access to capital so we can fund those high rate of return royalty opportunities we intend to continue to introduce into this very impressive portfolio, already very impressive portfolio that we have on a combined basis. So we're doing that with a strong balance sheet coming out of this and with a very experienced management team, which I'll get into in a bit more detail later on. But on a combined basis, we have over 300 years of mine operating experience, which is a clear distinction from our competitors. As you'll see later on, many of our management and board have not just been royalty players, but they've also been mine operators and builders, which is a clear advantage as we look to procure new royalty opportunities for our shareholders and achieve the high rates of return that you expect of us as you entrust us with your capital. This is what the company will look like on a combined basis in terms of our pro forma liquidity, our number of royalties that we'll have. We'll have over 100 royalties on a combined basis, 4 of them producing, a number of them in late stage development, and you'll see a significant upward trajectory in our cash flows over the next 5 years as a number of these development stage projects start to get into production. And we have a very, very strong balance sheet, as I said, with really no debt on the balance sheet and the ability to access capital quite readily. Many of you that have been following our story may have noticed that we only IPO'd back in March, and we raised $90 million US in our IPO and our inaugural listing, which is fairly impressive for a new royalty company, which at least initially only had 18 royalties. We've since acquired 5 others. And we've been active, even as we announced this deal with Ely, we've been actively out there procuring and buying new royalties. And Trey, for his part, Trey and Jerry on the Ely side have also added a couple of royalties into the portfolio since we announced the deal. So we're still open for business while we're trying to get this transaction done. And we're still seen as a go-to royalty player for the producers and operators that are looking to get capital to further their development stage aspirations. So we are still getting good royalty opportunities into the mix. Our shareholder base is I think quite impressive on a combined basis. We have a couple of key strategic shareholders. Gold Mining Inc., from which we were spun out of back in March, will remain a fairly significant shareholder. Eric Sprott, who was Ely's biggest shareholder, will still maintain a very, very strong shareholding within the combined company. So we're supported by well-capitalized, smart, strategic shareholders that can provide us additional source of capital as we look at growing a royalty business on a combined basis going forward. This is what the portfolio looks like. Exclusively America's focused right now, low political risk jurisdictions, over 100 royalties on a combined basis. You can see that as you go up the value chain, we have 4 producing royalties, as I said, a number that are in the late stage development cycle, which will produce cash flow in the coming years. And you'll see our cash flow actually grow about 5 or 6-fold over the next 5 years as a number of these development stage assets achieve optimum production levels. And beyond that, we have assets at every stage of development, from early stage to mid-stage or mid-cycle development opportunities that will produce cash flow growth opportunities for the foreseeable future on a combined basis. And again, in low political risk jurisdictions in the Americas, in countries that are receptive to mining, have a rational regulatory regime for mining. And, you know, quite often we get asked, Trey and I, are we going to diversify into other geographies? We're certainly open to that, but what I would tell you is we want to be in deposits that have good geological models, and we want to be with management teams that have a strong track record of operating in those jurisdictions. But we also want to be in jurisdictions that welcome mining. So we may look further afield in time, but we can assure you that we'll always maintain a low political risk profile for our shareholders. And that, again, will be a key distinguishing feature relative to some of the other royalty players in the space. And you can see among the sub $1 billion market cap royalty companies in the sector, and there are many of them now, and I think there's still quite a bit of scope for consolidation, as I alluded to a little earlier on. We are by far the leaders in terms of our number of royalties, the diversity of our royalties, and our balance sheet. Depending on how Ely shareholders elect on consideration for the Gold Royalty merger, we'll have anywhere from $25 to $60 million of cash in the balance sheet, and more importantly, no debt. And the ability to access capital, as we've clearly demonstrated in our IPO in March. And again, because of the strategic shareholders that we have, we don't have any problems getting access to capital and maintaining a very conservative balance sheet as we look to recapitalize and add more royalties into what's already a very impressive and diversified royalty portfolio. Re-rating is really what this is about. And this is what I sold Trey and Jerry on when I approached them with a premium offer of 40% for Ely. I saw the ability through a scale to achieve a significant re-rate in our multiple. And what I mean by that is typically companies of the size that we expect to be after the merger trade at 1.5 to 2 times the underlying value of their business. We're trading at roughly 1 times or slight discount to that in the market currently. And that's because we're relatively small individually. Collectively, we become very competitive, as you saw on the previous slide, with many of the larger players in that category. And that means we have a potential for a 50 to 100% re-rate, or a 50 to 100% upside in our share price post the merger through that re-rate opportunity. As we achieve scale, we get a bigger weighting on the passive indices like the GDXJ, which we graduated to at Gold Royalty just a couple of months ago. And as a result, the passive funds have to own more of us. And the strategic funds and institutional funds, the more traditional buyers, will have to weight up as well. And so that scale is extremely important, both in terms of achieving a re-rate for our shareholders, but also driving down our cost of capital so we become much more competitive when we bid on new royalty opportunities to continue to diversify our portfolio. I talked and I referenced very earlier on the depth of our management and board. I'm delighted that Trey is joining us on the board of directors. He and Jerry have built a very impressive generator model in Nevada that's continued to generate significant royalty opportunities organically through the staking of claims of properties and then vending those out and taking royalties back. And that's been a very fruitful way for Trey and Jerry to grow their business in the past. We're going to maintain that with Trey and Jerry joining our company and continue to run that generator model, which I think is going to be a meaningful source of royalties going forward. But beyond that, we specifically populated our board with people that have actually built and operated not only mines, but mining companies. And not least of which is Ian Telfer, who's the chair of our advisory board. Ian pioneered the whole streaming model with the creation of Wheaton Precious Metals 15 years ago, which he spun out my previous company, Gold Corp, where I was the CEO until I merged it with Newmont back in 2019 to create the world's biggest gold producer by market cap and production levels. And so Ian brings that institutional memory, that industrial memory into the organization, and as we start to form this gold royalty company and merge it with Ely. In addition to that, Alistair Still, who's our director of technical services, also runs Gold Mining Inc., the company from which we were spun out of. And Alistair is a geologist by training, but a prolific operator and mine builder over 25 years with Gold Corp and previously Placer Dome Canada. So he brings that technical depth and wherewithal into gold mining as he seeks to advance those projects through development stage and bring them into production in due course and achieve a re-rate on those assets, which by extension will help us re-rate our royalties within our portfolio in gold royalty. Alan Hare, who's also on the board. Alan, 35 years as a metallurgical engineer and prolific mine builder, who was my chief operating officer at Hudbay when I was the CEO there, and was my successor as CEO. So brings a lot of experience in mine building and operation to the table. And Warren Gilman runs Queens Road Capital, Li Ka-shing's natural resource fund out of Hong Kong, and joined our board, but is a cornerstone investor both in our IPO and continues to support the company as we look to do future capital raises to continue to grow our business. So it's a very, very deep management board, and I think that's really, really important distinguishing feature relative to our peers in the space, many of whom are run by former sell-side analysts, investment bankers, without that kind of depth of technical expertise. And that technical expertise is important from a couple of perspectives. One is it gives us a very clear-eyed view of the underlying risk of the royalty opportunities we're looking at. So we're able to do very, very extensive technical due diligence because of the depth of this technical team. But more importantly, because many of us have run senior mining companies, it gives us access and allows us to get into royalty opportunities earlier on before they become competitive processes and those royalty opportunities get bid up. We are allocating capital expecting to get double-digit rates of return for our shareholders. And competing or trying to participate in competitive process generally doesn't allow us to do that. So we try to get bilateral opportunities introduced through the access that this management and board affords us, given the depth of expertise and tenure in the mining business. So just wrapping it up, I think what this combination provides is a very compelling re-rate opportunity. It gives us scale. It gives us a lower cost of capital. It makes us more competitive as we look to continue to populate what's already a very impressive and diversified royalty portfolio within the combined company. Thank you very much for your attention this morning, and we'd be delighted to take questions.
Thank you, gentlemen. A great tour through where things are at the moment and in the final stages of this transaction. Thank you very much. Do want to get to the questions. We've had a number of hands raised from various parts of the audience here, so we'll get right into that, and I'll thank you for your insight as we move forward. A question comes in asking if someone has 10,000 Ely shares, what are the chances of getting all cash at $1.46? And if not, what would be the mix?
The chances are slim and none of getting all cash. If you have, there is less than 28% people who request all cash. Then you could you could receive all cash. But I think from the indications we're getting, we're probably already over that. So that 28%. So it's going to be somewhere. I'm using a figure of maybe 50 cents a share in cash, something like that. About 1/3 cash and 2/3. It could be higher than that, but trying to be conservative on that. And I think that's probably close to where it will come out.
Okay, thank you, Trey. Very good. Also, a timeline question here. Do you have a timeline on a New York Stock Exchange listing?
The company, David, one of the reasons that we put this merger together the way that we did was so that Gold Royalty would be the surviving entity, because they already have the New York Stock Exchange listing and the inclusion into the index funds. So, as from an Ely standpoint, that was one of our goals for this year, and it probably would have been in what's proven to be a rather tough market. We'd have probably had to do some type of a stock rollback or something to accomplish that. So with this merger, we will have the New York Stock Exchange listing as well as the inclusion into the index.
Great, thank you, David. Anything to add there?
No, that's exactly right. I mean, we deliberately went into the NYSE because the depth of liquidity and access to capital that the American markets provide us, and we're delighted to continue that listing. And as Trey pointed out, we were included on GDXJ a couple of months ago, which is a remarkable achievement for a company that only IPO'd in March. So we're quite excited about that.
Very good. Thank you for that. Now, I think I know the answer to this, but I'll ask it in good faith. Is the $1.46 US dollars or Canadian, gentlemen?
That is Canadian.
Great. Thank you for that. Next question here. Does Gold Royalty Corp intend to issue a passive foreign investment company year-end statement for the benefit of those U.S. shareholders at tax reporting?
I'm gonna have to. I'm gonna ask Joanne to get back. I know enough tax to be dangerous. I'm assuming we'll do all required regulatory filings, but I'm not sure I'm qualified to speak to that. But we'll get an answer back to you as quickly as possible.
Very good. Thank you. I know Joanne's on that already, so thank you for the follow-up there. And then question here, will we just get GROY shares if the deal goes through, is the question.
Will we just get GROY shares? Is that the question?
That's the question, yeah.
If you take the stock election, the odds are very good that you will get all stock at 0.245 GROY shares per every Ely share. If you take the cash option, you will likely get somewhere around, as I said, around 50 cents in cash, and probably somewhere around 0.15, 0.17 GROY shares. That's a moving number depending on how the cash divvies up. So
great. Thanks, Trey. Looking forward for future M&A, is there a preferred stage of the portfolio projects?
We're looking at them at every stage. We're very fortunate with the combination with Ely that we now have a good cash flow profile over the next 4 or 5 years, and also with the acquisition of Monarch's 5 royalties that we undertook just a couple of weeks ago. Those are going to be providing near-term cash flow next year as well, and with a significant growth profile and cash flow over the next 5 years as well. So we have the opportunity to continue to populate the pipeline right along from production through to early stage. And as I said, we're delighted that Trey and Jerry are going to continue within the organization generating those earlier stage opportunities as they've done very, very successfully. So we're happy to have that generator model for the early stage.
Okay. Thank you, David,
yeah,
for that.
Mark, let me add something there too, because, as we've gone through this process here, and it has, from the time we first started talking and kind of went exclusive, it was required to get some new updated reports for the 5 of the Gold Mining Inc. assets, which, of course, Gold Royalty has those underlying royalties on. And I just can't sing the praises of Alistair still. I mean, I've been in the business about 12 years and gone through this process. And in 6 weeks, Alistair put together updated resource reports on 5 different projects in 4 different countries. And these all included site visits. These are reports that were done by SRK, by Moose Mountain, by Scott Wilson. I mean, top engineering firms. And it speaks so much to I think his, not just his skill, but his contacts. Getting one of these firms to jump and drop what they're doing essentially, and organize site visits and everything, and do an updated report. Doing that with one of these top engineering companies in this market would be challenging in 6 weeks, and he was able to get 5 done. So I think that anybody who looks, at the situation now at gold mining and this incredible endowment of gold and some copper exposure in the Gold Mining Inc. portfolio that was built up over the last 10 years, which now is transitioning with Alistair into the more development stage. And of course, with his as corporate development at Gold Corp and Newmont, Kinross, Placer Dome. I mean, Alistair has all the connections to get these projects move along, get them joint ventured, get them into new hands. And the process of going through this thing has made me so much more excited about, the prospect of that endowment of it's north of 30 million ounces of gold in those Gold Mining Inc. portfolio. And I think that we're going to see some very exciting activity out of Alistair and his new team at Gold Mining Inc. as far as the development of that huge gold endowment.
I appreciate that, Trey. I mean, as you mentioned earlier, gentlemen, there's quite a history of experience in the sector on your board, and Alistair included quite the collection of pedigrees there. So thank you for walking us through that, Trey. I appreciate that. And with that in mind, looking forward, once this transaction goes through, we've been leading up and leading up and leading up. Once the corner is turned, I'm curious what perhaps the first orders of business would be for this new entity. And those of us that are watching the company, have invested in the company, what should we look for in the first few months once we turn that corner?
Well, look, we're actually actively pursuing further royalty opportunities. We'll continue to grow that portfolio, continue to diversify it, continue to introduce new opportunities. But we recognize we're entrusted with your savings, and I take that seriously. I'm a very large shareholder of Gold Royalty as well. I put my savings into it, and I expect to get double-digit rates of return on the capital we allocate. So you have a lot of confidence in our ability to do deep technical due diligence on these opportunities, get access to them early before people bid them up, and get those double-digit rates of return. So really, we're a bit of a machine. We're like a bank. We're there to put capital to work in these opportunities to help either expand existing operations, develop new ones, and we're providing meaningful access to capital to developers and explorers who, frankly, in this environment today, are challenged. The gold price has been a bit volatile. The equity markets have been volatile as well. We've seen actually multiples depressed for the producers and developers now. So they're going to have a much more difficult time accessing capital. We can provide a means to do that much more cost effectively for them. The other dynamic here that you should be aware of is, 10 years ago, when gold and base metals were doing extremely well, we saw massive inflation in input costs in the industry. And that's been largely stabilized over the last 5 or 6 years because you know what? Nobody's been building anything, either on the base or precious side. That's got to change. As I said, given the downward trajectory we've seen in reserves, both on the base and precious side, and given the elevated metal prices we have both for gold and base metal companies, we're going to see meaningful investment back into development. And against a backdrop of inflation rearing its head again in the general economy, we're going to see massive input cost inflation. And that's why it's so important when you're playing the gold space, play through the royalty companies, because you get that leverage to the gold price, you get leverage to the exploration success of the underlying assets. But what you're insulated from is input cost inflation. It doesn't really matter what the margin of our mines are, because we get top line exposure entirely.
Right.
And that's the dynamic we're entering in. That's why I think it's so timely to, one, be in gold because of the inflation cycle that's coming, but also be in the royalty companies to insulate yourself from that input cost inflation. Because when it happened 10 years ago, guess what? The gold mining equities actually underperformed the commodity. Even though the gold price was approaching $2,000 an ounce 10 years ago, the equities didn't perform because their input costs were going up and their margins were squeezed. And I think we're going to have basically a replay of that movie again.
Wow, that's a great perspective, David. Thank you.
Let me add something there, Mark. Too is not only the opportunity in the royalty space, that David just alluded to, but also looking at this slide, give you an idea of what powerful platform we're going to have here now for consolidation in the royalty space. This is something else that happened about 10 years ago, maybe closer to 8. But and if you look at this slide, you can see the opportunity here, in some of these other smaller royalties with the companies with not only a small number of royalties, some have producing, some don't. And look at the cash positions of those companies down here. I think that we're going to see more and more a potential here for this roll-up strategy and consolidation, and there is really a lot of opportunity here in that that space at the very low end, the junior royalties have we've seen 6 or 8 anyway, maybe 8 to 10 come on the scene here in the last couple of years. It's made the space very competitive, and many have overpaid. But as you can see in this environment now, just on a total cash basis, very difficult for a lot of these smaller royalties to show a lot more growth unless they can get their cost of capital down and raise cash. I mean, they just don't really have the cash positions out there in these small royalty companies to aggressively grow them. And I think that's one reason we're going to be very successful in a roll-up strategy here, that'll add not only royalties but more expertise to this fantastic team that David's put together and that Jerry and I are joining.
Terrific. Trey, thank you, gentlemen, for both those perspectives. I think it's great to get a bird's eye view as we're turning a corner here. On that note, and David, you gave us a great look back to 10 years ago, what happened in the space. And I know there's no crystal ball here, but if we were to look forward, there's curiosity in our audience here. What's your outlook, gentlemen, on the gold price over the next few years? If gold prices stay flattish or decline modestly, what do individual project IRRs look like for the portfolio?
Well, look, my perspective on gold is there's no reason we can't see $3,000 an ounce in this cycle, and I'm not just pulling that number out of the air. I look back in 1981, the last time we had significant inflation in our economy, and gold achieved at the time in $1981, $850 an ounce. In today's dollars, that's $3,000 an ounce. So we're not anywhere close to the all-time cyclical high for gold on a real basis. And I would argue that this is a much more pronounced inflationary cycle than we saw even in the 70s. That was driven by the oil embargo, which infected the supply chain and caused all sorts of inflation in the system. But what they didn't have back then that we have today is a coordinated effort by central banks globally to stimulate the economies through quantitative easing. And that's just a euphemism for printing money. And it's being done on a cooperative basis, effectively trying to inflate their governments out of debt. And the amount of debt that's been strapped on, particularly during the pandemic, is unprecedented. There's really no hope for that debt to ever be repaid in a fiscally responsible way. So the only way to deal with that debt is basically debase it. And that means debasing the underlying currency. And guess what? Gold is the only currency you can't print. It's been around for 4,000 years, and there's a very finite quantity of it. It can't be turned on and off it's very, very difficult for mining companies to turn on supply in response to price. It's inelastic to price, and supply is going down, even as the gold price is going down, because of the difficulty in getting new mines up and running, the capital intensity, the difficulty to get a social license to operate, and the timelines it takes to geologically define a deposit and demonstrate its economic potential. It takes a long, long time. There's high barriers to entry. That's not the case with paper currencies, or for that matter, digital currencies. There are no barriers to entry in that market. And the only limit is whether the printing press breaks down or not. And I'd say the same thing for digital currencies. It's just zeros and ones at the end of the day. Gold is very finite quantity and very, very difficult to produce.
An excellent point too, David. When you look back at the cyclical nature of the industry, we're talking 50 years ago into the 70s, how different the system is today. So I think often we need to take those considerations into mind as well. So thank you for that.
Hey, Mark, let me add something there too. Is that if you look back historically, and I think we all are seeing the effects of the inflation and all this money that's been thrown at the economy during the pandemic. The idea that they're looking to throw a bunch more at in the U.S. anyway, and social problems and stuff. And certainly we're seeing that inflation, and we're seeing it in commodity prices as in general. But if you look historically back at the performance of gold, and just to comment on that, gold has been weak here recently. I mean, had a flash crash yesterday, testing its March lows from this year. And people say, well, geez, with this inflation, why isn't gold acting better? And if you look back to the 70s, when we had, that real bout of inflation, it was not until the 80s that gold really gold really took off. And the reason is that gold does best in a period of stagflation. And I don't know if the stagflation, I do believe it's coming. I think that all the things that David mentioned, as well as the regulatory environment now under this new administration, is going to slow this economy down, and we may have another 12 months of this economy, acting pretty good worldwide. But when it does slow down, if inflation is still around, and I don't believe it's all transitory, you'll have a period of stagflation, and it wouldn't surprise me if as early as the end of this year that starts to be a word that is really getting thrown around. And of course, that's a period where you have low growth in GDP, and that's being outpaced by inflation. And we're actually getting very close to that now, although so even 4 or 5% inflation, which is to me almost a given in an environment where we go back to 1 to 2% growth, is a recipe for much higher gold prices.
I understand. Looking forward, and lots of potential there. I appreciate that very much. Another question comes in, gentlemen, asking what, if any, are the plans to issue Gold Royalty Corp on the Toronto Stock Exchange, and if yes, approximately when?
Yeah, I'd say in due course. Our focus right now is on getting this deal across the line in the next week or so, and the post-merger integration of the two organizations. And I would say the Canadian listing is inevitable. We just haven't laid out the timeline yet.
Okay. Thank you for that, David. There are a couple of questions regarding share options currently, so we'll get right to that. Can someone sell their shares immediately if they want, and will there be a waiting period after the sale?
Yeah, let me go through the mechanics of that, because I've seen a few things come up. Let me just comment on one other thing. I can tell you, well, we can't give out specifics. We can tell the voting is going very, very well. Very, very positive. And the mechanics of this I mentioned before. If you make an election with your stock through your broker will basically put that stock in escrow. He'll freeze that stock in your account because he's made the election, and they're responsible for that. So they can't. It would change all of their numbers if somebody sold their stock after making an election. So if you make an election, then you are going to have to wait for the Gold Royalty stock. Now, the timing of that should be very shortly after the meeting on the 17th. We get the positive vote. And then in Canada, unlike the US, where you go through the Federal Trade Commission and you get reviewed by agencies and stuff, in Canada we go through the court process. So we've been to the judge the first time. He looked at all the paperwork that we were going to send out. He approved the list and everybody who we needed to send the stuff to. We showed him our plan as far as hiring Griffin and having the helpline and how to, to get the brokers all on board to be able to make it fair to all the shareholders and even. And so after, and he said fine. So the judge basically said, if you mail this stuff, if you take this, what you've given me, and you mail it to the people you say you're supposed to mail it, you're going to mail it to, and you get the shareholder vote, then come back to me, and basically then that's when we get the approval. So, we're saying maybe a week after the meeting. It could be sooner. Hopefully end of August here. The judge isn't on a fishing trip or something, but the court could get delayed a bit. But we're going to get back into court as quickly as possible. We don't see any problem there, and then it should be just literally a matter of days of getting that Groy stock into the accounts.
Okay, that's great perspective, Trey. Thank you. A question here comes in: if the merger is completed as expected, when are we expected to receive the shares of Groy?
Well, that's what I just said. That should be within a couple of days of us getting the final court approval, and we'll of course announce that. We will announce the results of the meeting right away, and then, as I said, we'll have. Hopefully as quickly as possible, get back before the judge, get the final approval for the plan of arrangement, and then be in a position to have AST get that stock out. And in this electronic age, it's it should go very quickly. I mean, those that are going to be getting share certificates back, physical certificates, that may take longer. But as far as the stock getting into the brokerage accounts and being allocated, that should be rather quickly.
Terrific. Thank you for that, Trey. Next question up here: is there going to be a dividend at some point?
Certainly, as we get to a sustainable level of cash flow, I think an important element of a sustainable royalty company is a dividend. It's just a matter of time. So we're building up the business, we're building up the portfolio, and building up the cash flow. So given the trajectory in our cash flow the next 5 years, I feel very confident we'll be talking about dividend at some point.
Okay, thank you very much. A question from our friend here in Michigan asking, are we going to issue additional shares in the near future?
Certainly no current plans to do that, given that we're actually starting to generate cash flow. We're in a good position to sustain ourselves. We're actually negotiating a line of credit as well so that we have access to capital more quickly if we need it for an opportunity. So right now, our focus is very much on integrating the two businesses and getting us up and getting that re-rate that we're promising our shareholders.
Okay, thank you very much. We're going to bounce back to a previous question to honor a follow-up here. So we have our investor who shared that they're $10,000 in and asks, are we saying that 10,000 shares at 50 cents and 10,000 shares at 0.15 of Groy shares? Just curious for more definition there. So they're looking for clarity.
Okay, so I think you want to repeat the question
absolutely,
there, Mark?
Absolutely. So with 10,000 shares at 50 cents and 10,000 shares of the 15 cent Groy shares, what is that accurate? Just looking to clarify the math here.
Well, look, I have a table that can kind of break it down exactly. I want to say at if you give me a minute, I can go to the other computer and get that closer. But yeah, you would 10,000. You would, if you got 50 cents, obviously that's you'd get a check for $5,000 Canadian, and approximately I want to say it's 0.15, 0.16, something like that. So you for the remaining, in other words, that then you would get the 0.5 so approximately 1,500 Groy shares. with the cash.
Okay.
If it was all stock, for 10,000 shares, you would end up with 2,450 Groy shares.
Excellent. Great follow-up. Thank you very much. I see David nodding as well, so we're in good shape there. We're going to move over to Europe. We have a question here and just looking for confirmation that Eli Gold Royalties will be delisted from the Frankfurt Stock Exchange afternoon of August 18th. Can we confirm this? And then I can carry on with the question. Is that fact, folks?
I don't know that that's the exact date, but as soon as the judge has approved the merger, we will delist from all exchanges. So we'll delist from the Vancouver Stock Exchange, and the Frankfurt Exchange. I don't know if that follows. I know the OTCQX. Just once we delist, then that QX listing drops away. I'm not sure if we do have to do a physical delisting on Frankfurt, but it will happen, almost immediately after the court approval.
The decision. Very good. So following up with that, then Trey, will this affect the transfer of Ely shares to Gold Royalty Corp shares of those shareholders? Who have whose Eli shares are traded on this exchange in any way? And if so, what should those shareholders do? Any action required?
Well, not really, because depending on where your shares are, if they're at a broker, those shares are going to be identified through by the transfer agent, and they will be replaced at the brokerage with the Groy shares. So assuming that no shares with no election, they'll get that 0.245, and that in your account at that brokerage firm, it will be it'll be just changed over to Groy shares. Mm-hmm. Now, anybody who holds their physical certificates obviously has to turn those in to get the Groy shares with a on a longer term basis. The letter of transmittal that we put out, it also serves as a stock power and everything else for sending in the certificates. So there will be a period. I think I know it's up to 3 years. You have 3 years if you're sitting on an Ely share certificate to turn it in for the Groy shares. And if you don't, then you just basically lose your investment. The court requires this. I believe it's the court that requires a 3-year time frame there, and after that, you've got a pretty long period there to get your shares in. If you've missed this, and or you find a share certificate you'd forgotten about or something.
I appreciate that. I have to say, gentlemen, through this whole course of town halls, obviously investors are curious. What's my position? What are my options? What's my action list, and what comes next? I think you've offered a great insight through the course of these town halls. Thank you for that on behalf of the audience and our organization. We have one final question because we're moving north towards the top of the hour, and I always, as you know, like to leave it open at the end if something else has come to mind. So we'll wrap with this question from the audience that says, are you getting any inbound interest from existing smaller royalty companies that you've indicated may have issues competing in this landscape?
Well, look, I think this is almost a bit like musical chairs, and Trey alluded to it earlier on that 7-8 years ago there was a round of consolidation that went through among a number of the smaller royalty players. And look, it's a small industry. We all talk to each other in the normal course, and I can assure you that other royalty companies are taking note of what Trey and I have done here.
Terrific, David. Thank you for that. Trey, anything else to answer on that point?
No, I think David hit the nail on the head. We talk to these people, all the time as a normal course of business, and know a lot of these the CEOs of these smaller companies personally. So we're certainly not actively doing anything at this point, given where we are in the merger and the requirements of. We literally can't do anything until this merger is completed. Otherwise, we'd be changing the landscape of all the information circulars and everything that we send out to shareholders that they're voting on. So, while the normal course of business, as David alluded to, them purchasing the Monarch royalty. We have one that we actually just closed yesterday that we'll be announcing a smaller royalty transaction. But so, it's business as usual there at that end, and that's acceptable. But the idea of going out and, making outgoing calls, we're pretty much restricted at this point.
Fair enough. Thank you for that positioning. And at this point, gentlemen, it's 10 to the hour. I just want to thank you once again for bringing all this inside perspective and benchmark timeline moments that the audience and our investors are curious about with this transaction moving through inches closer at this point. As always, just want to open the door here for anything else that's come to you to share that we haven't touched on today.
Well, I would just say, and I see that Mike out there has made a comment, is that without looking exactly where Ely and Gold Royalties shares are trading, but as of yesterday, I think Gold Royalty closed at $5 US, with Ely trading around $1.30. I can tell you that when you do all the math there, or if you look at Ely on the ELYGF, and just do the math on a Canadian basis, that's worth about $1.50 in Groy stock. So right up until the meeting next on the 17th, and really, that's just a week away now. It's pretty exciting, and right up until then, you really can go out and purchase that stock in the open market, and you will be, you won't have an election. You'll be past the election deadline, but you will, receive that 0.245 Groy stock. So it's there still is a nice arbitrage out there for somebody who likes this story and wants to stay in it longer term. There is, availability in the marketplace out there as some people getting frustrated or for some reason selling their Ely stock, rather than being part of this longer term. So a pretty good opportunity, I think.
Fantastic. And, I'll echo the comments from earlier through one of our audience members saying, I wish every CEO were like you guys, and thank you very much. So clearly there's a lot of gratitude for the transparency and the guidance for this rather complex moment in two companies' histories moving into the new future. But I want to thank you both for your time. David, anything else to add before we wrap up?
I just wanted to say, for those that have voted already, thank you for the overwhelming support we've received to date. And I just encourage you, if you haven't voted, please do so.
Fantastic. Really appreciate that, gentlemen. I'll say thank you again on behalf of our audience and for everyone who joined us today from all points around the world. We're grateful for your time. We had Europe, we had the US, parts of Canada. So again, a very active session, gentlemen. It says a lot about who you are and what's happening with the company. And as always, we'll be watching very closely. So David and Trey, thanks for joining us today. Much appreciated.
Thanks, Mark.
See you guys.
All the best. Take care, folks.
Bye-bye.